Good afternoon. This is the Elliott Wave Daily Update for the S&P 500, being recorded on Monday, October the 27th at 3:03 p.m. Pacific Daylight Time. It kind of was a very dynamic day here in the ES due to the Globex opening, which was yesterday afternoon. The market gapped higher on that opening and basically held those higher levels overnight. And then when we came in, we just continued. And excuse me one moment while I take a sip of water. But the market basically continued to climb. Now here in the S&P, in this futures market, the market kept trying to get up to 6,900, which I had as a level, but in the SPX. It was a gamma level for the SPX. And it kept going, it kept trying, and they were always going to come, here comes a seller, here comes a seller. And in the futures market, they're tossing out 100, tossing out 125. And so I don't know if that was whatever that level was withholding, that the one side was trying to force the other or to hold that level or hold it as resistance. And so when it finally broke, it just broke and took out stops up to like 604, 605. And then it kind of wrestled there, came back in, went up to 69.10, and then came back down. The bell rings, and then they just take it back up. And this time they get to 69.16. And so it kind of reminded me of something, or just kind of brought back to memory that the possibility that the position that was there really just had to cover all at once at the top. And if they were going for futures to cover delta or gamma, whatever was happening, I think they kind of got hurt a little bit. That's what it looks like to me. So nonetheless, within the framework of the Elliott, it continued to hover and then get to these Fibonacci levels. Coming in today, I had the C wave, and the Fibonacci for the C wave with 100%, where wave C would be equal to wave A, came in at 69.09, 69.10. We got up to 16. We're now heading back down towards this support now. So it was resistance, becomes support. It'll be light, but if it comes down and continues to hold here, then it truly should clear the path for this thing to get up to 69.41 and to complete a third wave. So we have the one A of A, or one of A, or just the A wave, excuse me, A of 3, B of 3, and this is the C wave, and I can count out 5. And I want to detail that a little bit because it's like you can kind of look and go like we had here. A gap was overnight. In the SPX, which I'm going to show you, that was the second gap. We had a gap on Friday morning. We had a gap on Monday morning. This was CPI. This was Globex. So, and it was very, very much more dynamic here. But here we got to 1.618. I take this back out to the hourly, because that 1.618 is for the third wave. Hit it on the nose. 68.77.90, and the high, I believe, was 68.77.28. You can't hit that any closer on the nose. Now, whether it holds or not, it stopped there and the market closed. So it was an important level, and it completed, or we're very close to this third wave. Now, if you're just dealing with gaps, many, many times the market, this ends up, to me, an island. This ends up another island. So what are we making? An island chain, okay, whatever. But I think that what the market could do is, because I know that there's enough algorithms and enough traders that we're like, well, we're going to go fill the gap. And if we break there, then we'll go fill this gap. And that's just gap traders. That's kind of their gig. So to me, it makes sense. Now, if I'm thinking I'm going to put my 3 there again, this is the cash market. I don't get the exact same read in the futures market. But here, you can run fibs, and actually it would come into here. So even here, we're looking at 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5, or we're coming back up and we have a little 4 and then another 5. And we may not get to that till tomorrow. But if it happens overnight without the SPX, that could be the top of 3. Kind of the message. Let's go back over to the future because that is trading. We kind of get an idea of where we are. Now, what I do often, and I know I talk about this, but here we go again. I come down and I use the line chart. The line chart really does clean it up. I'm pretty satisfied all the way up to here. And so now, and down to here. What I want to do is count 5 from this low. So, but I'm okay with that. That's the A wave, A, B, C, B wave. And then I have 1, 2, 3, 4, 5 of 3, or 5 of 3. One of the two. And I understand. So we can go back down to that 15-minute chart. And you're going to see it cleaner there. So here we go again. 1, A, B, C, 2. 1, 2, 1, 2, 3, 4, 5 of 3, 4, 1, 2, and then you're going to have to work it out. So it could be 3, 1, 2, 3, or we got a sloppy 3 and a 4, and we did the 5, or we're done. And I can put the 3 up here, but I mean, I'll pull it out just a little bit. Got to go back out to my hourly. Pull it out just a little bit. And we can see that the 618 for the wave 3, which the SPX got to today, the equivalent in the SPX, it got to here. Here it did not. 1.618 is 69.41. Now, I think the market can get there. I think it may or could do it while the when the SPX is not trading. And if that happens, so if we go up overnight, we get to 69.41, we come back down to either where the market is now, trading now, or below it, then the SPX is not going to register that climb. Now, that's just saying if. It's a big if. So, but that is where I could put the 3 here, because as we look at it this way, we kind of think, well, we might have one more, a little 4 now, and we run up and we get closer to that 69.41. Now, either way, if we do it while the SPX is closed, then I'll still put the 3 there, because then they really will be matching up. And then we start to come down, because again, I'm looking at this is A of 3, B of 3, C of 3, and this 3 goes in up here, right? Color coded. There it is, the minuet third. Then we start looking at this mark for the minute fifth wave. Now, that minute fifth wave will coincide with, and once I get the C wave in, then this is going to come off, and we have new. So what we'll have after that, actually, if I put the 3 here, or in between, this comes off and this comes off, and we start working with this, we look for a 4, so we work for fibs coming in this direction. Then when that's done, I can put that 5th wave in, and it likely will start to fill in this little bit of a gap. And that gap is coming in, this I got to change. So yeah, forgive me, because it's going to go higher. Like I told you, I've changed a lot of my fib calculations. 2.618, and this one's going to be 4.236. And then this guy, yeah, these will get bigger, get a lot bigger. But I like what it does. They're good calculations, and I don't know if I need to go beyond this one for right now. Let me see where that 618 is. 2.618 is out here. 1.618. I know it's in there. Let me do this one more time. Oh, it was in the minor. 4.23. Oh, yeah, here it is. Sorry. So this one actually comes off because it's way out of balance. And this one is very much higher. So in essence, this was a little bit lower. So the minor degree, okay, got to go all the way out to the daily. So for the minor degree, which is way down here, this is the minor 5. I'm going to put this back on bar. This is the minor wave 4, so we're in minor wave 5. So, but inside, we're looking for what minor wave 5 can be. And then now we register it up to 77.99. So, and what's going to come in between, that's going to be quite the rally. But then again, look what we did today. If we continue to move at this rate, this is parabolic. It kind of fusses around, but it just, when it goes, it just hangs out here. It rises and it hangs out here. So the demand is there, but here's two things. Volume was relatively on the weak side. So again, up here, all-time new highs. Never been up here before. Who wants to sell? Unless you have a specific reason. As a day trader, you start to question a little bit because you saw what was happening to the bid and offer. I mean, it was nothing that they would make a decent-sized bid offer in the futures market. So maybe it would be in the ES, it would be, it could be between $1, $1.50. And they were trading on it. So you short it and they still need more. So they run it up very quick, which is pretty much what they did at the end of the day. It just kind of popped and it went because there was somebody either getting closed out or whatever the situation was, and they needed to get flat. And that took buying the future in order to get that position to where it needed to be. So, and there just weren't enough sellers gathered in one place, although they did hold 6,900. So either, there's so many different things on a trading basis you could say happened at that moment. But all I can tell you is that it got thin. And if you are trading and you get a move like that is not going to stop, but suddenly you're down 200, 400, 600, 1,000 real quick because they got to get it. So the algorithm is just going to keep on buying until it's filled. Now, you're a day trader. Can you handle the 1,000? Or you're going to have to take the hit, grit your teeth, and get really angry because it's going to come right back down. Except today, it didn't necessarily come right back down. It got held up. So they weren't able to fill it for quite some time. Okay? So I'm telling you, beware as a day trader, even as a swing trader, because it wasn't going to come back down. So here in the ES, I think we got a little bit. We're holding higher. We are holding higher. So the buyer is still there. And it's not huge, but they're still willing to buy it. I think if it breaks, it can break quickly. Now, you would put in, if the 3 is going to go here or come in between here, then you're going to run it from there, because that's the 2. And this would be the 3. Or if I do, I can run it from here to wherever it ends. And this is like 1, 2, or the A, B, and the C. So that way you run it from here. So we have several different levels. We're either going to run it from here up. If this is just the 3 of the 5 going up, then you get a smaller one, maybe back to here, and we run back up again, get up into here, come back again, finishing the 3. So finishing the minuet 3rd, then we have a larger correction because then you're coming back to here to get your next level of fibs. You're getting a 4th wave. So you might come in from the 2 to the top of the 3 for your fibs coming down. And it's 2.3, 2.36, 3.825, 50%. And 50% on this high of a level, I don't think would fit, because a lot of people are going to start to tell you, say, oh, no, that was at the top is in and we're dying. And there's a lot of that going on too. Okay, so wrapping it up, we're still in that minute 5th wave going up. I don't know how much this is going to show. I got to pull it open a little bit. There you go. Let's see there. If I go like that, nope, it's not going to do it. So anyway, there's the 3 and the 4, and you can see it's an ABC. So we're still in a diagonal. So once I get that 3, I am going to draw that boundary going this way. Then I'm going to look for the 4. And if it's a diagonal, we're going to go up this way. And it's going to really start to hone in on an area above us. The actual fibs, I don't think we get here within the context of this wave, that C wave. We could, but I don't think so. Not when I come all the way down on the other chart. But there it sits. And this is for the 5. This is for the whole whole shebang. And that takes us up to 76.57, which I think is more realistic, along with that minor. So remember that once the minute fifth wave is in, the minor fifth wave will be in, the intermediate fifth wave will be in, the primary fifth wave will be in, and we'll be hitting the cycle 3 top. And we're going to come into that larger correction. Or somehow the degree changes, something changes to allow for additional climb, like that fifth wave could really climb. We still can extend a little bit more in the third. Because remember, this is the week, the October week, it's the end of October. We're looking for the market to supposedly correct through this up until like mid-November. So we got a lot of stuff coming out this week. It's not necessarily pointing right now. Emotionally, when we listen to whatever, everything seems to be falling into place for the market to love it and to keep and just start building on this rally. Now, we have earnings that are coming out, and it's 5 out of the 7 Mag 7 stocks. And they are Apple, Amazon, Google, Meta, and Microsoft. And they're all coming by the 30th. So we have some on the 28th, 28th, 29th. I don't know, maybe we don't have any tomorrow, but 29th and the 30th. 29th is FOMC day. And the 30th is when US and China are meeting, sitting down at that negotiation table and sealing and delivering what we're being told from the higher ups. Done deal. We're good. This is all going to look perfect. You're going to love it. We'll see. Market will make its choice. We cannot say at this point that it's all rosy and clean and let's just go, go, go. I don't want to buy that. We have both sides of this story. And from here, we can go into a little bit deeper of a fourth wave correction. And wave 4 can certainly overlap wave 1. We're in a diagonal. It can overlap wave 1. And here is wave 1. So do we have the potential that we could drop back to 67.80? Yeah, we do. Or actually 67.67. We do. We're at 69.12, folks. And it's not going to be all that much, but boy, it's going to feel like it. And then still go back up. So then that's the 4, and we'd be in that 5th. And that 5th can extend. Absolutely, that 5th can extend. Just like this 3rd. Or the 3rd is extending more here. Our next level, 69.41, and then 69.64. That to the minute is just a pause, a rest. Take a break, but not a top. Tops come in past this. So again, is there enough to drive it higher? Sure is. There sure is. It might be all spec, folks. It might just be all blow up. It might just be all fear. It might all kinds of things. But we can get up there. All right. Before I talk up the rest of the night, I'm going to end it right there. Tomorrow, gamma levels, by the way, we went through them. We went through them before we actually got started. So I think it'll be interesting to see where they get placed again. Now, tomorrow we have S&P Case-Shiller Home Price Index. We should get a number, but it's just 20 cities. San Francisco is one of them. We have consumer confidence at 10 a.m. All right. That's it. Our next update will be tomorrow morning, and we will update the gamma levels on the morning update.